We can go to the third one. That is the FXD1 stroke 2022 stroke 025. The same story, we can tell that it is taxable FXD1. It was issued in 2022 and the original tenure was 25 years. Of course, we are in 2025, so around 3 years has elapsed. So the remaining time to maturity is 22.6 years. So we say that bonds are quite long term. You can just get the time to maturities that we are talking about. So here we are talking about putting your money where you can stick up to a period of 22.6 years. I know it sounds a lot, but maybe it is not that long as it sounds. Then the coupon rate is at 14.188%, quite competitive again, because we are currently at a very low interest rates era, where we have the government securities which are short-term issued on a weekly basis, that is the Treasury bills, paying interest of as low as 8%. So getting a 14% is quite competitive. I would consider that as a quite competitive interest rate. Then the bond, the interest attracts a withholding tax of 10%. That means that out of the interest that you gain, the taxman will take away 10%. We get to the period of sale, the same from the 20th of March to the 2nd of April 2025. So the deadline for submission of the bid is 2nd April 10 a.m. The settlement date, that is the date by which you should have sent your money to the Central Bank of Kenya after your bid is successful, will be on the 7th of April 2025. The minimum amount as usual is 50,000. The price, one of the probable dirty price of that bond is 106.53. What it means is that if you intend to invest 100,000, you'll pay 106,530. And I have said that I have discussed the clean price, the accrued interest, and the dirty price, and the whole concept in a very separate video. So I will put the link on of that video in the comment of this video, so that you can go and check and have a deeper understanding of what are all these that we are talking about: the clean price, the accrued interest, the dirty price. Then the bond pays interest in the month of April and October. So then we go to the coupon calculation and see how much you start to gain, using an example of an investor who puts in 100,000. So that is 14.18% times 100,000. We multiply by 0.9 because the 10% belongs to the taxman. So we get to 12,769 per annum. And so divide that by 2 because the interest is paid in 2 installments. So you get 63.84 in April, and you get 63.84 in October. So those are the deals that are on offer for the month of April. It is a good thing that you can try, though it is a low risk, a low return investment, but you can chip in and try. If you have some funds, if you have some idle funds lying somewhere, before you get to decide what to do with them, though this is quite long term, but it does not mean that you should hold you should always hold the bond for the 9.9, 12 or 22 years. Of course you can always liquidate, but it comes with its own consequences. But if you have some idle funds lying somewhere, it is one of the things that you can try, especially those people who are not willing to take a lot of risk, because it is considered quite a low risk investment. And I can assure you that getting those notification of those coupons coming in, maybe even when you least expect them, is quite good. So it is a thing that that you can try. Then there are of course the factors that you can consider. Now that we have 3 bonds that are on offer, there are the factors that you can get to consider. Of course, number 1 is the time to maturity, depending on how long you are willing to commit your funds. Maybe you are not willing to commit your funds for so long, like 22 years. So you can, the element of time can force you to go for the bond paying the lowest coupon rate. The other thing that you can consider is the coupon rate. That is, we are human beings, so the more the interest rate, the more we get attracted. So considering interest rate, you'll get to run for that 14.188 bond. But when it comes to reopened bonds, you need to compare the coupon rate and the price. The bond might pay a very good coupon rate, but the bond might also be very, very expensive. So we'll do some calculation in a different video so that we can get to see which bond is good, comparing the coupon rate and the prices, and we'll get to see. Other thing you can consider is the month which the installment is paid. You see, one of the intentions that you can have as a bond investor is ensuring that you have a coupon payment every month. So you can take this one if you don't have any passive income in the months of August and February. You can split your amount between the 2 bonds so that you can have some amount in August, February, April, and October. So you only need like 6 bonds, and you'll have some you'll have some passive income, like for every other month. So it is also a factor that you can consider. So otherwise, those are the offers that are on for the months of April 2025. In case you have any query about the bonds, don't shy off from asking, and I will be willing and will be glad to respond to you.